Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, 16th day of September 2019, and this is the Daily Report for Gold and Silver. The attack on Saudi Arabia's oil production and their fields by 10 drones over the weekend sent oil flying, the single greatest jump in history in terms of a one-day jump. Currently up about 13% in terms of October futures. We saw a flight to safe haven assets such as gold and silver and the dollar and the yen. And we saw downside pressure in global equities, of course, including the Dow, the Standard & Poor's, and the NASDAQ, all trading lower on the day. That, coupled with the fact that beginning tomorrow, the FOMC meeting will commence and conclude on Wednesday with an anticipated rate cut of 0.25%, could continue to be highly supportive of both gold and silver pricing. Let's take a look at our current prices as well as our technical studies. Saturday, an Iranian-backed set of rebels launched a drone attack against the world's largest processing facility, as well as a major oil field in Saudi Arabia. That, of course, sent crude light flying, the single largest single-day gain in history. Currently, we are looking at October light crude futures, which are up $6.80. That is a 12.5% gain at 65.64. That also affected the safe haven asset class, with silver gaining about 2% on the day. That is at 17.92, with the dollar gaining almost 0.4%. A 37-point rise at 98.20, and gold gaining 0.4%, currently trading at 1505.80. Now, those markets did react favorably as a safe haven asset, and with the Federal Reserve set to meet tomorrow and conclude on Wednesday, announcing a rate cut, we could see this market in terms of gold and silver continue to track higher. Let's take a look at our current technical studies. The attack this weekend on the oil fields and production facilities by Iranian-backed rebels certainly had an effect on crude oil. It also had an effect on the safe haven assets. The dollar, which was strong today, closed up almost 0.4%, and gold closed up almost 0.4% on top of that, which simply means if we take away dollar strength today, we would have had double the move that we saw in gold. Gold is currently trading at 1505.90. The high today was 1519.70, and it is precisely where we entered our trade back last week. We're in at 1506. We will maintain our stop at 1488, and my target right now, if the market continues to track higher, which I believe it will, on the low side comes in at around 1537. On the high side, about 1549 to 1548 in that area. So I see a basic zone in which we could see gold trade to that pretty much accompanies this particular band right in here, which would take us to the recent tops we saw a couple of weeks ago in gold that came in above 1558. I believe it was 1564. Therefore, traders, my recommendation is to maintain our current long position as well as our current stop. As far as silver goes, it did outperform gold by a measure of about 4-to-1, with an uptick of about 2% on the day, 35 cents, currently at 17.91. If you recall from Friday's show, we talked about the fact that I believe that we were at a critical level of major support. The market closed just above 1740, and that is the 50% Fibonacci retracement area. We also see resistance up near these tops at about 1946, but now that the market has sold off last week and moved back very, very close to support. And we did get a bounce today. This is a bullish harami, of course. It tells me that the real target, if we see silver continue to rise, and I believe it will be about 1830. At that point, if it exceeds that, we can look for the next level at 1946. But first, we have to get past about 1830 in terms of December silver. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.